Okay, where is my book at? Give me 1 sec. All right, might as well make my little statement then since I'm going to record. Okay, look, this is not financial advice. I am not a professional stock trader, nor am I a financial advisor of any kind. I make no guarantees, nor do I offer any promises of any kind with the processes or the information shared in this video. Okay, so here we go. Uh, how they build up a move like this is just like this. People put their money in these consolidation ports. We all know that, right? When they say, are you liquid, that means how much money you got to spend. How much can you spend right now? Cash. All right. Now, if you go up this ladder, let's say overall they had to put $1 billion to get this to the top here. All right. So right here, they're not going to put $1 billion right here. They're going to put whatever they feel they have to put in order to get you to participate to get in here. Okay. So you're like, let's see what the SPY is going to do today. Okay. Starts dropping. This is probably from another move back here somewhere, pre-market, whatever they were doing, who knows. Okay. Then you can't see my pointer. See it? Can you see it? All right. Can you see me? Can you see my pointer now? All right. So this area is in the yellow box. We all know this is in the yellow box because it's consolidating. Okay. When it consolidates, supply and demand, liquidity, whatever you want to call it. Like I said, if they want to build this move up, they want the market to move in a certain way. What happens is they need to get you to participate. They need you to get you to put your money in there. Let's say it takes them $1 billion. Let's say say today we're gonna put $1 billion in the market. Okay, so what they do is they put a little in here to get the market moving. People jump in. They say, "Oh, the SPY. Okay, where's it gonna go? I think it's gonna. Oh, look at that. It's breaking out. It's going up." So people start putting money in here. Millions of people start putting money in here. So they're done with this spot. They're not going to put any more money here. Okay? Especially if they know puts are not coming in. But they already got their money here. And now they're building another chain up with your help and your dollars right here. We get to this level. Everybody's like, oh, it's going up. All the newer people, it's going up. It's going up. What do we got to do? We got to put money in. The SPY's going up. Okay? Consolidates across. We're putting money in. We're putting money in. What do? They take a little money out. They take some of their profit from you putting money in. Not enough to that you'll notice that it's going down or up, or they just consolidate. Then people put their money in. They put money in. If people are not putting in, they put it in themselves. They put a little more money in. Remember, they got like $1 billion for today. Okay? Comes over here, they feel they got enough money, they've sold enough, they've put money in, they've averaged out, they're in the profit, they move up. Who moves them up? We do. They push us up with this, we do this. Millions of us, okay? That's why this is called liquidity. Liquidity, small time liquidity here. Because you're putting your money in and it's making them liquid, not us. It's making them liquid. So, they put in, let's say they put in 100 million here. And then you guys put in your money and then they did all their taking here. The people were putting in more money because they said, look at that run. It's coming up. This is another area where it's consolidating. People putting their money in. It's becoming liquid for them. They take their money out. They do their averaging. They're up now. But they still got money here. Okay? They still got money here because they've sold off some, just like they put some in. Okay, just follow. You see it? Okay, so they've sold off some of what they put in here, but then now they've averaged out because you've put your money in. And all these fights down on these candles, they went ahead and got their money back. but they still got a little money here to come and get later. Okay? Same thing here. And let's say they put another 100 million. And they just keep building this thing up. And you got to remember, they got $1 billion. So by the time they get up here, they've done this here, 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 and here. This is strategic. They've come up. Let's say they've spent, $1 billion, and let's say they've collected 500 million. Okay? So they're down 500 million, but they don't care because across this line here we go, liquidity. Here we go. We have a little rundown. They sell off here, get some money back. They sell off here, get some money back. They sell off here, get some money back. It comes up. They sell off here. Now they're only down like 100 million. But they're not counting it like that. They're counting it like, okay, we put $1 billion out there of the money to spend money to make the money. We've collected 500 million. We got 100 more million for us to get back what we put in. They come over here. They do this again. Comes down. Remember, we had a little fight here. And then they're like, okay, all you people here and here that still got your money sitting in this thing, that makes it liquidity, and people down here, all you guys that got your money still sitting, and by the parabolic move down, you could tell it's right here. You could tell all this money is sitting in here, and you guys think it's going up. Back and forth, the pullbacks, whatever you want to call it, it's going up. Look at it, hit the line. Then it hit the line again. And what happened? Boom, 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 boom. All the way down to here. Okay? All the way. Now they got their 100 million back plus collected probably 500 million. Now they're 1.5 billion in. This is how they do it. They build it up. They build spots of liquidity. Okay? And then they come back and they suck them all dry. They've sucked all the liquidity out of this, out of this, out of this. And then look at, what did I tell you guys when this was going parabolic yesterday? I said, no, not getting in it. Not getting in it. Why? Because it's parabolic. And I told you guys about parabolic moves. You put in an order right here, thinking you're going to catch this thing, and you don't get filled till down here because they're dropping it so fast on you because they want their money. Okay? So once they drop this on you, you get in here, you're barely in, then it comes here, it consolidates. You say, I know it's still going to go down. Let me put some more money in here. So you put some more money in here. Then it gets to this point, it consolidates, you're thinking, I'm up. But actually, this is only like a 382 down to 381. It's only like $1 move. They collect some more money as you put your puts in there. That's the fight back. That's the buy pressure coming up. Okay? Then they say, okay, suckers, let's get it. Let's really get it. Look at the doji. Everybody's like, yeah, I know it's going to break down. It's going down. Now let's look over here. Here's the area of liquidity here. These are probably gone. There's probably nothing for them to suck out, probably bare bones, but they don't care. They want to make sure they snatch up every drop of it. So now, this is why I drew these boxes in between. You start getting liquidity between these boxes. Like this one came down here. Liquidity's here over here, but it's here on this guy. It came back up. They built it here. Where's it at? It's in between. Why? Because everybody like me saying there's the liquidity, and they're going to build it in between and take a good look. It's below the parabolic. It's below it. The first consolidation, a little liquidity pool here. It's below that. They sucked that dry. They sucked this dry. They've sucked those puts dry. They come back up. They create it, and people saying, oh, it's going to go up. People are this crazy that people are this crazy that they think this thing is going to go back up. They don't see what's happening. That's why I was like, I'm not touching it. And then what happened? Bam, 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 bam. They sell off. Now they suck this dry. They made sure they suck that dry. And they're just having a field day. Now they're probably up 2 billion. They're probably at like 1.8, 1.9. You think they're not making this money, but they're making it. And that's how they do it, using liquidity. Liquidity is just a fancy word that sounds good. That's it. but it's basically just money there that they need to come and get back. So if you look at the chart on this side, this is strategically positioned up to grab your money, but they're not going to let you get too much of their money. So they suck out. When you're putting in, they suck it out. If nobody is putting money in, then they stimulate the market by putting money in it. Okay? They stimulate it. If nobody's taking money out, they stimulate it by taking money out. So right here, bam, 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 bam. Everybody here is like, oh my God, it's falling. And then they see a green candle. They say, oh, well, hold on. It may come back. Bam, bam, bam. It's like, this is so easy to read, you guys. And then you got these little pools. They just suck them dry. You got this. Oh, they ran it back that way, took all this money. It is not a mistake, or it's not random that these places end where they end. Look at right at the bottom of the liquidity pool here. You got another one forming, taking money, and people are just throwing money at this thing. No wonder they're billionaires. And then they sell off and they take all these calls along with the calls they put in themselves. Come here, they do it again. It's the same story. Rinse and repeat. Like I think Sun says, rinse and repeat, right? Same story over and over. And people just keep throwing money because you know better than the market. You know better than the market, okay? And they create this. Look how different this pattern down is than this pattern up. Look where the spots of liquidity on this side are, and look where they're at on this side. That's it. Can't say it any easier than that. That's it. Liquidity is basically little spots where they have money left over and they got to come get their money. This move right here was a FU. You can't do nothing about it. You can't do anything about it. And if I wasn't talking and explaining this stuff, I probably would have seen that. You know, I'm not blaming anything on anybody because I like to teach and I'm choosing to do it. But I probably would have seen that. And I probably would have said, hey, you know, they're going to drop the hammer. Especially they're hitting this line here. I'm like, look what they got. We're up, up, up. I know what they're doing. You know, and then we're talking through this and then bam, 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 bam. You do not get in this right here, man. This is a falling sword, not a falling knife. Okay. And they're satisfied right here. Oh, look at that. Under the pool of liquidity, they close. Look at that. How convenient. Look at same story. Now this is where I could tell you all this money is pretty much gone, and this is a whole new chain forming over here because of the way that it's off. Okay, unless you would have seen liquidity here, liquidity here, liquidity here, liquidity here, and liquidity here. Oh, we did. Look at that. But I could tell you, this closed down here because we did have liquidity here. Look at that. None of this stuff is not planned. This is all planned. And when you follow their plan, you lose. Okay? When you follow their plan, they lose. When you follow them, you win. Same thing here. They do this all day. I wish I could do this, man. How rich I'd be. I wish. They probably made $2 billion. And you think because, you know, I can only get 10 contracts, I can only get 100, I can only get one contract. I don't have that kind of money. You think everybody, no, they have that kind of money. They have that kind of money to move this market. This was built. Okay, this was built. This was coerced and this was a FU. And they do it to you every day, but not here. Not if you know what's going on. And then look at look what they did from here. Came all the way down. They did it again. And they made sure. They just had to make sure they had everything sucked out of every gaping hole they had over here and come back up. This is no accident. Look at the structure of this. Look at. But on the way back up this way, oh yeah, look at liquidity's in the same spots. How convenient. How convenient. Look at that. So they had to parabolically suck it dry here. And they built up here, then they had to suck it dry here. And people are like, oh, it's going back up. It's going to come back up here. And no, I don't think so. And look at how convenient that it, on the last parabolic candle here, right before they went liquid here, look at, and then they go liquid here, and then look what happens. and they suck you dry, boop, going out of the door here, and there's nothing you can do about it. That's liquidity, man. That's it in a nutshell. I don't want to use all these fancy words that these guys use, and they're speaking like they're this. It sounds good, but that's the very basic breakdown of liquidity. Yeah, there's more to it, but that's the very basic breakdown. That's how I do it. I break it down very basic. Okay, that's it. There's no magic to it. Anybody have any questions? Okay, so if there's no questions, then I'm thinking we all got it, right? Right, right. It's basically like this. You put money into something, an investment. At some point, you want to take some money out of there. You want to see some profit. At some point, you're not going to just. This is why I don't agree with the crypto slogan hold, hodl, whatever the hell they call it. They did that so you would do just that. You would hold. And you'll sit there and get sucked dry on your liquidity holding your crypto. You'll sit there and your pile will just disappear before your eyes. The value of it will disappear, and you'll just keep holding. And then it will go up and you'll say, oh, I'm up, but you won't sell anything. You're programmed. Period. It's no different over here. You just don't know what's going on. I'm telling you what's going on. I'm telling you what's going on, you guys. You put money in, you want to take more money out, but nope, you end up taking less money out, and you're like scratching your head. I don't understand. Well, listen closely. Get a paper, write it down. Watch the video again, because I'm telling you what's happening. I'm telling you. So when I'm explaining this stuff and I can't get in and you guys can get in, I'm happy with that. But if you guys can't understand this and don't get in and can't see it now, I'm starting to feel like, come on, man. I'm not being able to take trades because I'm teaching you guys this stuff. And so I'm missing money and you're not making any. Somebody here got to make some money. Somebody here got to make some money. I'll be damned if nobody here makes money. Come on now. Everybody in here is winning. Even the newbies are winning. You guys, pay attention. It's not hard. I know I talk a lot, but that's because of, people not listening a lot. I want you to get it down. Subconsciously, I'm telling you what's going on. And it's simple as that. No conspiracies. Hey, if I had $1 billion to run this thing up like this, I'd probably do it too. And I'd watch as everybody put their money in, then I'd laugh as I hit the button and I sell off. And then when you sell off and I buy it back at a cheaper rate and you want to catch up with me and do it again and do it again and do it again and do it again. I've blown up accounts just like everybody else. But once I started executing this stuff and knowing this stuff, I don't blow up accounts no more because I know better. I don't take crazy trades, or I look at things like this falling knife here and I say, I don't think so. No, thank you, sir. This is a sword, much less a knife. And you really look at these things, man. 385.12 down to 383. So $2.12 was all it took. How many people do you think put money in this thing on the way up? A lot. A lot of people put money in there for them to make a $2 move and take all that money back. And it may not have been $1 billion, but I know it was. You could go back and look at the dark pool. You can add all that stuff up, and you're going to come up with. You should come up with $1 billion. I mean, come on, man. This is the way it goes. You guys got. You can beat the AI. I show you guys how to do it every day. It's crazy because the way I do it, I show newbies how to do it, and they're like, holy moly, I know what's going on now. I see it. When you get it, you get it. But until then, please ask me questions. Until then, please, I don't care. It's not stupid questions. Ask. Okay? We got to start going forward. Because if we're not going forward, then you guys are stalling me out. I like it. I love it that Alan asks me. Every day, Alan's quizzing me like, oh, he's not quizzing me, but he's like, you know, what is this? What is that? He has a list of questions. I love it. I love it. That shows me he's eager to learn. That shows me that he wants to succeed. You know, ask the questions. Don't just sit here all day and don't play anything. You don't have to play your real money. Play the paper. Get the concepts down. I know, Cyber. I know. No, you don't, because you're not doing it. Do it. I'm not talking to anybody particular. Just do it. Don't worry about what Cyber's doing. You do what you do. Okay? Follow the rules. Do what you do. And trust me, you're going to be good. Okay? All right. I'm going to stop the video right here.